Welcome viewers, you're watching the Mortgage Busters show. We're all about busting your mortgage or helping you do that. We bring the experts on the show to show you how you can get your mortgage in record time down to zero. My name's Greg.
I'm Adrian.
We co-host the show, and we've got a fantastic challenge operating at the moment. That is our 1,000-day Mortgage Buster challenge. Isn't it going well?
Yes, it's moving along.
Moving along.
Moving along.
Tell us, are we getting people calling
Emails, phone calls?
It's all happening.
Everyone's busy.
Have we still got room?
Yes.
So we challenge you, ladies and gentlemen, or anyone who's got a mortgage out there, we challenge you to pay it off or get the bulk of it out of the way within 1,000 days. We had a guy that was on the show a few weeks ago. His name is Chris Bondon from Budget Works, and he paid off his mortgage in 973 days. And Steve Hudson, who is our finance guru, who you see on every show at the end in the last segment, has really created this Mortgage Busters 1,000-day challenge, and he's put the challenge out to you to pay your mortgage off within 1,000 days, which is less than 3 years.
That's right, it's amazing stuff.
I mean, some people are hanging on to 30 years, Adrian.
Well, keep going.
Why keep going? Exactly. Why? Why?
Family loan.
Yeah, exactly. It's a generational thing. You pass
loan.
it down. Forget all that. Pay it off, get it down to zero, and then take another mortgage out to maybe get an investment or whatever the case may be. But you're in control. All right. We've got a guest.
Yes,
who's waiting for us. We're waiting for him, and his name is Laurence Hugo, and he's from Credit Mediation Services. Credit Mediation Services. Laurence, welcome to the show.
Thank you, Greg.
Coming.
Great to have you on.
Thank you.
Thanks for having me.
So, what does Credit Mediation Services do? What do you do?
We work in a very boutique industry. Not many people have heard of this industry, debt negotiations. What it involves in is negotiating debts as an alternative to insolvency. So, for example, you have a client who owes $10,000. That $10,000 through the course of negotiations can be reduced down to $2,000.
That's a big
huge
chunk.
Yeah, within a few days.
Really?
That can be done.
Wow.
Yes.
So we're talking tax bill or credit card bill, or they're all the same?
All the above. They're all different, and how they're negotiated, be it a tax, personal loan, overdraft, credit cards and so on, how they're negotiated is different depending on the type of debt it is. Generally, the only kind of debt that we cannot touch is secured loans. But anything unsecured, it's open season.
Because we have a lot of viewers that watch the show that might be going for new finance, or they're wanting to refinance or something like that. And because of an issue that happened 3 years ago, that a little bill or something that wasn't paid, it's damaged their credit rating and they can't move forward until that's cleared off or whatever the case may be. Do you get a lot of people that just want to clean up their records so they can take another step forward?
From time to time, and you would consult someone in the credit repair industry who would be involved in removing that default, be it either a bankruptcy or a regular default or a judgment default, for example, or clear out. And they would specialise in removing those defaults. What a client would do with us is if they, say for example, you were talking about having mortgages paid off within 3 years, which is an amazing feat. Clients will get quite disheartened when they see a credit card statement at such a high balance. Right down the bottom they see the time it will take to pay this debt off.
That's right, never.
I mean, how long have you seen that? 120 years.
That's right.
I've
actually never seen that.
It does say that.
It does say that.
Yeah.
It's quite incredible.
If you pay the
never
minimum
noticed that
off,
before.
it'll take...
Yeah, well, recent changes in the legislation, 2009, the NCCP requires a bank to disclose that information at the bottom of the statements.
I don't know why, but I've just never noticed that. I'm going to look.
Yeah, I had a neighbour telling me about it. He says, I'm going to be 150 or something, he said, when I pay my credit card off. He says, it says it down the bottom.
Amazing.
So this 1,000-day challenge, you should introduce that with your credit cards too.
That's not a bad idea. Yeah.
So clients look at this sort of thing. Customers, they see that they're massively in debt. There's no way in the world that they can pay this debt off. They're experiencing some degree of financial hardship, so they might be paying their credit cards on the button every month. But the problem is a big dentist bill comes in and they're in trouble.
Yeah.
So what do they do?
A lot of debt is also not in your control. A lot of things have happened that haven't had anything really to do with you, but you're a guarantor, you're married to the person.
Right.
A lot of those
Scenarios.
Yes.
all of the scenarios, you end up with 20, 30 grand sort of floating around that
Well, a case
never
in
even
point.
caused.
We had an old age pensioner. We provided our service pro bono for her. She was in her 80s, and
Wow.
Grandson used up her credit card to
Well, there you
start
go.
a business, and
That's
the
what I'm
business
saying.
obviously didn't turn out, and
Yeah, right.
so the
Chasing
bank was
her.
chasing her. Yep. So
Did you
we
help her? How did that pan out?
Well, she ended up owing $38,000 from a personal loan with a major bank. Because of the idiosyncrasies of her particular profile, we're able to reduce that to $4,000 for her.
Wowie.
Wow.
And so she sourced the money from one of her children, and they paid the $4,000 to the bank, and it was settled with no credit defaults on her credit rating.
Something that really amazes me, somebody's in default already, and they just keep putting on fees, and just keep putting on fees, and just keep putting on fees. I mean, that person's already stuffed.
Right.
Yeah,
It's a
it's
hot
like
topic.
you-
It's a
you're
hot
down
topic.
It's just not
down.
right. It's just
You're
not right.
down and out,
How
and
can
they turn the
and
knife as well.
they stick it. Yeah.
Yeah,
I
exactly.
know. I mean, you look at Commonwealth Bank made a comment about it just recently. There's a class action lawsuit about that at the moment. The original concept, obviously, is if you're in arrears, we're going to whack a $3 fee on, or a $5 or a $10, whatever the case might be.
This is doubling and tripling and quadrupling in some places.
It's an incentive not to be in arrears. But why am I in arrears? Because I can't afford to make
That's
my
right.
payments.
So how can
Yeah.
you then
it's making
pay
it worse.
more payments?
Exactly right. So it's a financial institution who doesn't understand and lack the empathy for what serious people who are suffering serious financial hardship are actually going through.
Well, if there's no more income coming in, how do you pay it? You can't.
It just
can't.
You can't. And
you
if you've
rob
got them
Peter to pay
everywhere,
Paul.
and they're
Yeah.
ringing you every
Yeah.
day, which people, we hear this all the time. People are getting called every day, SMS'd, emailed, harassed.
Facebooked, LinkedIn.
I don't know
really?
about that.
Really?
I don't do
Yeah.
Facebook.
See, I don't have Facebook, so really.
Well, you're safe with your debts then, if that's the case.
No, really, I don't do Facebook, so
Well, we
Yeah.
they
cancelled
will
it
go to that
electronically.
extent to chase you on Facebook.
We're not talking about banks, we're talking about the debt collection
Debt collection
Yeah, right,
agencies.
where
right.
professional debt collectors
Okay,
will
yeah.
push the boundaries somewhat to collect their debts.
Jeez.
Well, that's fantastic, though.
Yeah.
That there's actually a business out that can do this.
Yeah.
So the long and short of it is if it's an unsecured debt, such as a credit card, a personal loan, and if you're feeling that you're experiencing some struggles in paying that, even though it's up to date, that is negotiable. And I'd encourage you to consult a debt negotiator. You can find them on Google to talk with them about doing a settlement. By doing so, you're not ruining your credit rating, and you're going to save yourself a bunch of cash.
Fantastic. We've got to go to a break, but we'll talk more when we come back.
By the way.
All right, you're watching The Mortgage Busters. We'll be back after these messages. You're watching The Mortgage Busters show, and we're talking to Laurence Hugo from Credit Mediation Services. Laurence, so you help people in financial hardship.
Yes. Yeah. To elaborate, a debt negotiator can assist anyone who's suffering some degree of financial hardship on two extremes. The first, on the verge of bankruptcy, and no other options that apply for bankruptcy. On the other extreme, we have got someone who's, look, I'm paying my credit cards, I'm paying my mortgage, but I'm eating noodles for dinner. Or a big bill will come in, like a big electricity bill, and I can't afford to pay it. So under the hardship laws, that could be considered as financial hardship and eligible for a settlement. So based off that extreme, where I'm just barely keeping my head above water, you could arguably get 60 cents in the dollar on your credit cards. I've got a $50,000 debt, I can get that down to $25,000 to $30,000.
You must have a lot of job satisfaction in what you do with successes like that.
Yeah, immensely.
Yeah.
Every client that comes and uses our service, we get a huge amount of satisfaction. We've lined up agreements with a couple of different cancer wards in Sydney, and cancer. Yeah.
Right.
So they refer their patients to us who's suffering some degree of financial hardship. One story that comes to mind is a young lady, 26, just had a baby. She lost her house because she was diagnosed with tongue cancer. Lost her house, couldn't afford it. The bank had foreclosed on her. She had $60,000 in credit card debt. Husband had left her. Really tragic story. And she's battling tongue cancer. So she was referred to us by a doctor, and she came to us, and immediately we were able to reduce that 60 down to nil for her
Oh.
within
Nil?
a few days. Within
Wow.
a few days.
And that can take years.
that could take years of monthly repayments. It could take
years of
years.
just giving
Not
up.
years, decades.
Oh, giving up.
Decades, or
Yeah.
even, who knows how long it'll take. But with her, the priority is taking the financial pressure off her so she can fight her cancer. And it got to the point with her where she had to have her tongue removed. She couldn't eat or drink or speak any longer, and she had a newborn baby. So it's a really terrible case, but at the very least what we could do is remove that pressure, that financial hardship pressure, off her so that she can concentrate on her recovery.
Is there a minimum amount that this is where it's viable?
10,000 combined debts would be a minimum. Because there's a lot of work involved in negotiating, it's not a matter of calling the bank up and say, hey, can you take 50 cents to the dollar? It doesn't work like that.
I'm sure not.
It has to be done by a professional who can package the deal together properly and then use their personal contacts with the creditors to garner a better deal for the client. So if I'm going to go in to negotiate and I'm a layman and I have no idea what I'm doing, I'm going to provide too much information or too little information. Or I provide the information in the wrong way, and that could ruin a negotiation process. So it's got to be done properly.
Is there solicitors involved? Do you have to actually be a solicitor
No.
or something to do this, or
No.
it's just
The debt
the
negotiators that I know who work in the industry, there's about 5 or 6 in the country, and their background is banking, legal, debt recovery.
okay?
How did you get into this?
Banking, legal, debt
Okay.
recovery.
So obviously you make a living out of it.
Well, yeah.
Yeah. How does that happen?
Well, look, I mean, my background is banking, but I've got extensive experience working with Lifeline and training suicide counselling.
Oh wow!
And that, coupled with the debt recoveries, legal debt recovery side, seemed to be an oxymoron if you think about it.
Yeah.
So there was a way that I was able to combine the two, using that experience and helping people out. And that's, truth be told, that's how I got into the industry. But mostly the debt negotiators' experience is banking. You're negotiating with bankers, you're negotiating with solicitors, and you're negotiating with hardcore debt collectors. So it's a given that your background has some degree of exposure to that experience.
And you make a living out of it. There must be a fee or a charge, or it comes from somewhere, doesn't it?
Well, the industry charges differently. With our organisation, Credit Mediation Services, we're based in Sydney, we provide our service strictly 30% as pro bono. So a lot of people, old age pensioners, the case that I mentioned before, where there was cancer, we would generally provide our service without charge. And they'll get not a supplementary service, they'll get the full force of debt negotiation.
I like the way you said that. So I'd like to have you on my side, that's for sure.
There's no way you're going to let
got
the
a few
banks get
people
away with
already.
it. You've got someone who's dying of cancer.
Yeah.
You want to get in there, get the job done
absolutely.
properly. The remaining 70%, there is a fee, but only on success.
Okay.
So if we get, for example, 100,000 down to 40,000 for the client, now the client says, nah, not happy with that, not a worry. You have us free. And that 40 cents goes back up to 100 cents in the dollar. Everyone goes home unpaid. So only if the customer is satisfied and if we are successful.
But how do you
that's when there's a
survive?
fee.
Well, you wouldn't have many of those, though, would you? That would be...
No, obviously not.
No.
It rarely happens.
Do you have repeat clients, like you'll
No.
repair somebody and get them in good order and then they go off and do it again?
Very rare, because
Take a
we'll
while.
clean them up.
Yeah, right.
And by this stage, you've pretty much had enough of credit cards, haven't you?
Yeah.
You owe 50, 60,000, you're in trouble, you do a deal, you borrow 30 grand to get rid of 60 from mum and dad, so you've got to pay mum and dad back.
Borrow
Yeah, of
from
course.
Peter to
Of
pay
course.
Paul.
Exactly. And by now you've learnt your lesson about credit cards. No way, debit cards for me.
Yeah, right.
So generally we don't get, and we fix them up completely, so we don't leave any creditors behind.
What about repossessed things? Like some people have cars, some people
Right.
have farming equipment.
Yes.
And different. What happens with what looms? Because obviously it's repossessed and there's still a lot of money outstanding. Is that what you do as well?
Yeah, we get that question quite a lot, and it's a good question. We can't negotiate a secured debt other than providing, say, a 3 to 6 month moratorium on payments.
Ah,
That aside, Once the debt is, once the car is repossessed or the asset is repossessed, and there's a debt outstanding, well, it becomes what they call an unsecured debt. That's negotiable.
Okay.
I've got a car worth 50, it's sold for 20, and I still owe the $30,000. That 30 is negotiable.
Wow. Gee.
Very good.
Okay, Laurence, we've got to wind up. But thanks so much for being on our show.
Not a worry.
Yeah, absolutely.
And winding up is not a word you want to use
No,
in our
you're right,
industry.
fair enough.
Sorry, I interrupted
No, that's
you there.
okay. That's okay. I get it. I understand. But thanks so much for coming on.
Not a worry,
and it's been an absolute pleasure to have you. Viewers, if you're struggling with finances, if you're going through any financial hardship, Laurence's details will be on our website, which will show up on the screen. Make contact with him or his workers or offsiders or his company, Credit Services Management, and just see where you go with all that. But again, thanks, Laurence. We'll see you after the break with Stephen Hudson, our finance guru. See you then. Welcome back, viewers. You're with the Mortgage Busters show, and we have Stephen Hudson, our finance
Guru,
with us again. Steve, welcome back.
Greg, Adrian, what a great segment with Hugo Laurence.
Laurence
Sorry,
Hugo.
but,
Yeah, it's all right. I nearly made the same mistake myself. Hugo Laurence. No, Laurence Hugo from Credit Mediation Services. Well, I mean, the amount of job satisfaction that guy must get.
Must be huge. Yeah,
It must be Hugo.
Oh God, it's getting bad.
Turning into the comedy hour. There we go. Today, guys, what I wanted to talk about was chunking again, and just refresh a little bit with our viewers.
I love the chunking.
Yeah,
I love it.
And the
Fantastic
response, Adrian, has been fantastic to the 1,000-day Mortgage Busters Challenge. Has been brilliant.
I love it. Every time I hear it, I love it. Viewers, if you're not on board with that, get on board. Check out our website. Get on board with the 1,000-day Mortgage Busters Challenge.
Yeah, an interesting one from some clients out at Pakenham. We got their situation is quite unique when we come back to the chunking. We've always talked with chunking about being 3 years and how we layer it. This couple here just they'd had a baby. It's about 18 months old, and Mrs. wants to go back to work, and that's what they plan on doing. And they plan in having another child in 2 years' time. So they wanted to actually look at chunking over 2 years, not 3 years. So let's just refresh the viewers what chunking's all about. We'll go to the whiteboard.
The trusty whiteboard. But that's good because they're not letting their finances control their lives. They're setting themselves
they're
forward
in charge.
with the plan. They're in charge.
They're in charge.
And they're saying, let's get it done.
Yeah, they wanted to do that. They had a couple of debts that they wanted to actually put into the mortgage as well, because they can see the opportunity of reducing the outgoings. And this is what's smart about this couple. They're planning ahead.
Yes.
They've got their plan for their family. So what's our financial situation going to change in 2 years? Let's structure up to meet that challenge in 2 years' time.
Fantastic.
So what they had was, in a good financial position. They've got a house that's valued around about $400,000. And they've got a mortgage which was, it was $300. It was just a bit less than that, okay? So what they wanted, they had a car loan, and they had a credit card, and that was 12, and that was 8. So we put this onto the loan of 320. So we remortgaged the house. Now with chunking, what we do is we usually say to the customer, in 3 years, how much can you pay off? Because this couple wanted to have a child, 2 years was what they wanted. Mrs. was going back to work, so what the plan was, full-time teacher, to actually pay off as much as possible in 2 years. Now, a teacher earns somewhere around about $60,000 after tax. It's more likely 45, but they wanted to pay off in that 2 years was $95,000. Now, someone help me with the math. Is what that's.
Everyone's gone
It's 235, yeah. 235.
When the camera's rolling and you're trying to do maths, it doesn't work sometimes. So that's the amount that they'll be left with the mortgage after 2 years. So what we said to them was that we'd put this into a variable rate and we do a principal and interest.
It's actually
what?
215, I think. Is that right?
Geez, we've got the
Yeah,
mortgage broker that can't do subtraction.
320,
5,
220,
2.
225.
225.
Yeah.
Sorry, yeah, 225.
Just rub it out and
Yeah,
do it again.
yeah. So we've got
Sorry, I was looking at it and I thought that's not right.
Yeah,
but
yeah,
anyway,
yeah.
It's 225.
225.
That's it.
That's not bad for an English teacher.
Yeah, exactly.
They can do maths.
Yeah.
So 225, and what these guys wanted to do was fix it for 5 years. Now, we're not advocating for 5 years. It's just that at the moment, the banks have got 5-year rates at rates that's never been seen before by the banks for 5 years. They're historically low. So they wanted to set it for 5 years, again planning ahead, that they would have this amount left and 2 children. And this would be interest only, as we said previously, part of chunking. So any of the principal payments that you would have been paying off that sum goes into that amount.
I love it because it's a very targeted amount. Everything, all your energy goes into that 95,000.
Absolutely. Now they're chunking off a fair bit there, left with a small, very, very manageable, it's not small, but very manageable loan for them after 2 years. And when the second child comes along, they'll be in a very, very good position. And while the fixed rate for 5 years is a very, very good rate, and we say interest only, they plan on leaving it as interest only once the second child comes along, so they can still enjoy their life, okay?
Yeah, right.
So they've got rid of the car debt of $12,000, K's for thousands, isn't it? So,
yeah, of course.
So there we go, that 20K was put onto that loan here with their current mortgage, 320. We've looked then at how much they can actually chunk off in 2 years, not 3. In fact, you can make it 4 years, you can make it 5 years, whatever your destiny is as far as budgeting goes, that you can actually make that term any time. But you don't want to make it too long.
No, 2 and 3 years I think is good.
You want to really, really focus it on an amount that's manageable that you can pay off. So they're in a very, very, very good position. And when after the 5 years, what their plan is to use the equity they've got in the house to look to buying an investment property.
And then that will help them pay off even faster the remaining balance.
Absolutely.
Yeah.
But it's going to be worth more in 5 years, isn't
Well,
it?
let's have a look in 5 years' time. Again, we say the magic 10%. They're going up. Let's be conservative. We're looking at 5% over each year. We won't worry about compounding, but that's 21K per year. It's going up. 5 years.
Another
So
100.
that's
Say another 100.
105. So they've got a property now worth 525 with a mortgage.
Less than half.
So they've got equity of $300,000.
Well,
Nice.
all
They can
because
get-
of chunking.
Well, chunking and time.
And because they've decided to take control
And
of
do
it
something.
and do something.
That's the thing.
Absolutely.
That's the thing, Greg, Adrian.
Yeah.
They took
But
control.
there's nobody out there, that's the thing.
Had a
that
plan.
actually helps them plan this stuff. Nobody tells them.
So using the 1,000-day Mortgage Busters challenge, they've taken our plan a little bit different, planned it around their family, and they've put a plan in place. Brilliant.
Fantastic. I love it. I love it. Steve, again, thanks very much for coming in and showing us the whiteboard and everything. I mean, that is just a great solution for a couple that, have decided to take the reins of their own finances and take control of their future, their family, having their children, working out their finances. They know where they'll be in 3, 4, 5 years' time.
Beautiful.
Control.
Great job.
Yeah.
Absolutely.
Well done, guys.
All right. Well, from myself, on behalf of Steve, Adrian, we'll see you next week on the Mortgage Busters show. Same time, same place, same station, all of that. We'll see you next week.